What's up, guys? I wanted to jump on real quick and just quickly kind of share my strategy as far as how I go about looking to enter a position or just start investing in a stock. And a couple of the first things I want to point out is what I think is the best option for long-term growth is dollar cost averaging, consistently putting money in areas. If you can somehow automate it, if you can have some way to speed up that process so you're not having to constantly think about it, but it's something that's automatically transferred out, automatically buys the shares, or at least goes into your account, so then you can go ahead and execute to start that investing journey. But dollar cost averaging, I think, is going to be the most successful long term. And that, for those who don't know what that means, dollar cost averaging is buying consistently, essentially changing your average cost of purchasing the stock or purchasing the investment over a period of time. And so if that's weekly, if that's bi-weekly, if you're getting paid every other week, maybe that's a couple times a month, you can kind of set up how you want to structure that. Today, I'm specifically talking more about once you have that option to start, you have the cash available. Once you've set up kind of your emergency fund, you've done the basics of the financial realm, and you're ready to start investing, and to look for a lower risk entry option. And so that's kind of what I'm going to be quickly going over and showing you today. So let's go ahead and jump into it. So right here, I am on TradingView and using this to kind of give you an example of what I'm looking for. So a couple key things to look for is, and I kind of have this tracked out, is different support and resistance markers. And so like right here, if I just do some quick analysis, there seems to be a little resistance it's catching right here. So there's a chance this could drop in the next couple of days because it can't break through kind of that resistance wall where there's a lot of people looking to sell. So you can run into that at times. But what you're really looking for is these breakout options. So this is the 200-day moving average. I really like this one for long-term buy and sells. This is something you're looking at if you're looking to really grow over the long period. These other, the 5-day and the 13-day, are more if you're quickly trading, getting in and out of positions, which is not the purpose of this video. So the main things I'm looking at is that 200-day moving average, and then these levels of resistance and levels of support. So this is kind of where the support and the resistance levels are currently with the SPY. This is the S&P 500 ETF. So how to know if now's a good time to start purchasing and to start moving some money over into the SPY. Now, if you look historically, and I'm going to have to zoom out a little bit, but the last time the SPY broke out above the 200-day was right here in about June of 2020 was the last time it kind of went below. And we obviously saw record jump from that time. But typically once that has a breakthrough motion and once that starts going, it gets a lot more support. Your chances of it continuing on a bull run are much higher than if you're trying to buy when it's breaking below this. You can, if you get lucky, time the market like that. But most of the time, you're going to hold that too long. Let's say you bought down here, you're going to hold it too long and you're going to end up selling in here because you get impatient. So it's better, in my opinion, to look for the times when we have a breakout. Now we're in a unique spot right here. Whoops, I'm moving that around. Where we are currently above that 200-day moving average. We'll probably see some consolidation here, I would anticipate, before we go on a next bull run. But it is good to see that we've broken out of it. It looks like it tested the below markers for a few days, but ended up back above it. So what that means from a technical standpoint is there's going to be a lot more buyers when this starts to come down closer to that 200-day moving average, which is going to keep pushing the stocks up, keep pushing the companies up. Now I look at this a lot on a company level because you'll be able to see some vast differences as well, but it's good from an index level as well to see kind of what the market's doing. When are the buyers jumping into these companies, and how is that affecting? Now we've just seen some incredible earnings releases from both Google, from Microsoft, from Facebook, from Meta. So we've seen kind of this second breakout here the last few days due to them. So you still have to pay attention to what's going on in the market. You can't just do it off the technical analysis. But hopefully this gives you a good idea of kind of what you're looking for when you start buying. So I feel a lot more comfortable starting to purchase if I'm just starting, if I want to start now. Starting right now because we are above that 200-day moving average. Now we could easily drop below, as you can see here, but I feel like my risk level is a little lower because there should be a little more support once it comes down to those levels. So another one with the triple Qs here, Invesco QQQ. So similarly, this is a little, it's going to be kind of have a similar movement to the SPY. And you can see kind of these jumps in between here. Eventually stayed below the 200-day for a good chunk of time. Couldn't consistently stay above. Now it's been above it. It's tested it twice, but it's remained strong. And now it looks like we're seeing another little consolidation here. If it breaks through this support level, we could see another run, or this resistance level, we could see another run. The support levels are probably a little lower down here. But those are some of the things you're looking for when you're looking at the technical side. And at the end of the day, there's never a perfect time to buy. There's never a perfect time to sell. That's why I like the dollar cost averaging approach, is slowly getting in, slowly building up that position over time. Your risk level of it, like if you just put a lump sum in at the same time, is much less. And yeah, hopefully that kind of gives you guys a good understanding of what to look for when you're doing some stock analysis, company analysis. Obviously, I just did it with indexes. I think if you're just getting into investing, that's where you start. I like the Qs. I like the SPY. You typically do VOO, the Vanguard S&P 500 ETF. But yeah, those are some of my favorites, and hopefully this was helpful. Thanks, guys.